Okay. Hello, everyone. So this is Beyond the Greeks. This is a research-focused live stream we do. We try to do this every week. We have a lot of folks on the research team in Panoptic. Amy Caldoun is one of them. So first of all, Amy, how are you today?
I'm very good. How are you?
Yeah, very good. So we're at Panoptic are dealing with options. Options are maybe hard to understand for some. Even me, I learn every day something new. Amy comes in with a background in finance and pure math, some physics there, which is what I like about her too. But we're trying to create content. You may have seen our Twitter posts. We did research by it quite a bit. Now we go a bit deeper, have something that's a little bit more like a short presentation with Amy or Nathan as well that presented a few weeks ago, going deep into a specific topic. But yeah, Amy, last time we spoke, you were at an airport, so now.
Yes. So now it's all calm, and normally it should be good. Like the sound of my voice should be like very clean. So
Perfect. Yeah. I think hopefully the flight went well. Amy was able to travel to the US. We met her for the first time, the whole
yes,
team in
my
Denver.
first time in the US after 27 years of existence. Can you believe it?
It's fine. Yeah, US. Denver might not be the best place for going in late February, but overall, I'm hopefully you had some good time there too.
Yeah, it was really great, and the team was awesome. Like it was great to connect with everybody and just like see everybody excited about the crypto space and networking
Perfect.
and stuff.
Yeah. So again, we will get started again. Amy will be presenting this. I'll be adding comments maybe or going through it. But yeah, why don't you take it away, Amy, about your piece today?
Yeah, perfect. Thank you very much. So yeah, hello guys. This is Amy. Last time we saw each other was like a few weeks ago, and it was I kind of talked about implied volatility, but this time it's going to be a little bit different. So the objective of this presentation is to kind of illustrate that introducing options in DeFi is not just about adding like unnecessary complexity, but rather a logical and essential evolution towards a more efficient, liquid, and resilient crypto market. So, like any product, it's always interesting to explore its past, the present, and also the potential future. And here, most importantly, is to also explore the benefits of using options in the crypto space. And we can move to
Oh,
the
can you
next
can you change
slide.
it? You said, yeah, this is the first time we're figuring it out. But yeah, can you change the slides yourself? Oh, I have to go.
Um, no, I don't think
Okay.
so.
All right. So I'll be sliding it with.
Oh, is this me? Did I do it? Because I tried with the arrows. Okay.
Oh, yeah. I think I did, but yeah.
All right. Okay, so here's some history of options in the crypto space. So crypto options trading evolved through key milestones. So there's ICBit launched the first Bitcoin option platform in 2013, followed by Deribit structured contract in 2016, and Ledger's X compliant physically delivered options in 2017. However, the adoption was kind of slow due to bear market, liquidity issues, and also low demand. And to boost adoption, so they're a bit kind of leverage perpetual and future contracts, while Ledger struggled with liquidity due to some US regulation, um, as always. In 2000, in 2019, uh, so they're a bit added ETH options, and a company called Backed launched BTC options, making institutional interest. The 2020 crypto derivatives boom saw CME, Binance, OKEx, and FTX enter, though companies like Bakkt and Huobi exited. So FTX acquired LedgerX in 2021, eventually integrating into FTX.US derivatives, while Binance and FTX improved OTC option trading. On the other hand, on-chain options trading emerged in 2020 with Opium Network, and by 2022, over 35 DeFi option projects had launched, and locking up like up to 750 million plus dollars, which is quite amazing. And that year, also Goldman Sachs executed an OTC Bitcoin option trading, signaling institutional adoption. From 2022 to 2024, The market faced challenges and growth. So we know that the big FTX collapse in November 2022 that highlighted the need for decentralized alternatives. And despite this, DeFi platforms like Derry grew, and by 2023, we have Bitcoin options surpassed futures in open interest, reaching $17.5 billion. And also, we saw some institutional involvement that increased with Nomura, so the Japanese bank launching a Bitcoin fund. And by 2024, Deribit solidified its dominance, becoming the leading platform for both retail and institutional traders. And we can move to the next slide to, yes, I said yes. The next slide to see the chart, which, so the graphs illustrate the growth in Bitcoin and Ethereum option trading volume across major platforms, so including Deribit, OKX, Binance, and Delta Exchange Global. So over time, we see that Deribit has consistently dominated the market, while other exchanges have kind of like gradually increased their share. And there's like a notable surge in trading volume, which occurred between 2023 and 2025. And this kind of reflects rising institutional participation and market maturation. So this, so far, we've been talking about options in CeFi. And now it's a little bit also in DeFi, but now it's more interesting to see the options in DeFi in the next slide.
Oh, maybe. So this is interesting. So Deribit is definitely the major player here.
Yeah,
The
so
IBIT option, so the ETF that launched in the US. I don't know if this is from the blog, but I don't know if you have figures. I heard they were catching up or even exceeding Deribit's volume.
in, I don't know, I'm not sure about that.
Okay,
Like one thing for sure is that Deribit holds like plus 80% of trades in CeFi, which
mhm.
is quite amazing. That's why we use Deribit implied volatility for like now there's like many startups. They're very interested in options. So they're based here in Paris, and what they do now is like they just use Deribit implied volatility to price their options, their vote, or anything. So like this Deribit for them is just like the leading market for everything option wise. Like they use the data to kind of have a some kind of some metrics to see like where the market is going, where it has been, and eventually IV as well to either trade or price or anything between.
Yeah, no, I think because I looked, I trade options in TradFi, use Tasty Trade, and then you can see IBIT options. I trade them quite often. I trade any instrument that is liquid, and whether it's Bitcoin or Tesla or some random stock. If
Mm.
it's liquid, I trade. But yeah, I'm looking at the volumes. So
Yeah,
it's
right.
actually more volumes today, up to like since opening, than Apple stocks, the IBIT,
Oh yeah,
and less than Amazon, but it's exceeding Facebook, it's exceeding Walmart, Microsoft. So it's actually, and even Coinbase. It's
yeah,
actually a very, very liquid product. I'm looking at I have a strangle myself, but there's like thousands, if not tens of thousands, of open interest. So I would be interested to see how IBIT and the ETFs option fare with Deribit.
yeah,
But yeah, I think that's another point of entry. Deribit
yeah,
is close to US users. Institutions cannot do this effectively. The smart and very, very advanced firms can all access the IBIT. So I would not be surprised if, again, IBIT is greater than Deribit, but also kind of will keep growing.
yeah. Actually, like it makes sense a little bit because also we have the saying that 10 years in TradFi is the equivalent of 2 years in crypto. So if we manage to exceed everything TradFi wise, so like I
Yeah,
mean, it
but
just makes sense because like the evolution is kind of like exponential in the crypto space. So
exactly. And I think the IBIT was definitely something that was very, very good for the industry. Even some
mm,
people may not be, and yeah. And then now I'm looking and I'm trying to shield Panoptic a little bit, but I'm gonna share my screen for a little bit. But on IBIT, you can trade volatility the same way you trade for any asset, and the volatility of the Bitcoin IBIT ETF is 60%, 60% IV, which is high but not super high. Again, similar to maybe even Amazon or Google. But if you
yeah,
go on Panoptic, The liquidity on Uniswap is in a weird way. This is the USDC BTC pool. Liquidity is not super well deployed, and because of that, the IV is 96%. So even though you may be trading on chain and you may be trading in a perpetual option, there is a natural discrepancy here, some high level of inefficiency between IBIT, which has billions of dollars worth of capital trading it every day, and Uniswap slash Panoptic, because of that lack of uh, liquidity redistribution, and I'm sure the price went down lately, it is quite high, 196%. This is a very, very high level of IV. So, anyways, the IBITs, the derivatives of the world, are extremely traded. I mean, traded quite a bit, and they are um, very efficient. There is some
Mm,
inefficiency on the Panoptic side.
yeah, but also like we launched on December, so
Oh,
we need to take into account that. So
exactly. But
we
it
definitely,
is
we
the
definitely,
Uniswap market. So again, even though we are building on Uniswap, the market is extremely liquid. It has been around for again several years now, and that is kind of the interesting part. You are now able to trade on the volatility aspect of it without being at the uh, at the level of having to bootstrap liquidity.
yeah,
Seems like
exactly.
I've lost the
Let's get the
presentation. Yes.
presentation back.
Ad scene. There we go. What? Apologies for that. Or maybe I'll share my screen. Yeah. Okay. Small technical difficulty. Let's go back to the PDF, which was here.
All right. Okay, so this is, we've been talking about options in CeFi. Now we can move to options in DeFi and like kind of uh, give more details on that. So as we can see, between 2020 and 2021, there's the first DeFi options platform, such as Open and Hedgic, introduced decentralized on-chain option trading. So these early models focused on um, covered calls, protective puts, and insurance-like products. And so, like, very simple in the beginning. And though they faced liquidity and usability challenges, so like in crypto, there's always, like, when you start a product, there's always problems related to either liquidity or low interest or just like usability challenges. So yeah, as the market evolved, these platforms like Opium and also Ribbon Finance emerged, offering structured yield products utilizing options, so making it very easy to trade. And by 2022, the DeFi options landscape has expanded significantly, and we have like covering European, American exotic options, and a total value locked that, as I said, surpassed 750 million. And there's like innovation and liquidity, followed by there's a protocol like Cleara, Premia, and Dopex that introduce AMM based options, which is a very different kind of pricing, at least compared to CeFi, with all the automatization of options votes as well. And more recently, which is the most important thing here, it's like the perpetual options gained a lot of traction with platform like ours, Panoptic, providing low cost, or now we don't even have fees for that. So uh, guys, you can just uh, yeah, get into that before we we get the fees in, or maybe not. We won't be able to do that eventually. We never know.
Yep.
Uh, and so there's like also we provide like continuous volatility exposure without traditional expiration as we have in CeFi, making it another major step forward in the evolution of DeFi options. And that's it as far as history is concerned. Now we can move to our main topic, which is the key benefits of crypto options. So as you can see in the slide, we have different keywords. And so we know, like, generally speaking, so we know that options provide a range of strategic advantages that enhance trading, risk management, and market efficiency in the digital asset space. And we have that in TradFi. I mean, options, they've been there. I mean, they've been there for so long, even in the Greek era. but they have been kind of modelized in the 70s with a model called Black Controls. And since then, the market of TradFi was very, very liquid. And here we expect to have the same thing. And why? Because options, they provide many things, so they're present in many areas. In this case, we have market liquidity, which ensures seamless entry and exits for traders, while market sentiment analysis allows participants to gauge investors' outlook based on option pricing and open interest. There's volatility trading as well, which enables traders to profit from fluctuations without predicting like the underlying asset, for instance, ETH or BTC, etc. And we have so here we have price discovery, which helps establish fair asset values through market driving option pricing. So that's another magic thing that option allows you to do. There's also flexibility in strategy, and we have it also in our platform. So we have many strategies that are already implemented through smart contracts, which allow traders to implement various approaches, including hedging, speculation, eventually probably arbitrage, especially between CFI and DeFi. That's a very interesting topic as well.
Yeah, the volume that we see on Deribit and iBit, it's actually a very very bullish thing about these arbitrage trades.
Yeah,
You can trade on iBit and have billions of dollars on the other side of that trade, and then that means you can benefit quite a bit by seeing, like I showed earlier, the BTC vol might be higher on chain, lower on Deribit, so there's natural trade where you can sell on units on Panoptic, buy on Deribit. It's like the same way you arb the price between Binance and Uniswap. And there's like
yeah,
the LVR and MEV and all of that is solely to make sure the prices match. We have a similar level of arbitrage that can happen on the volatility itself. So again, vol
yeah.
is very complex, but it is maybe even more profitable than just spot trading.
Exactly. Well, it is complex, but obviously, like here, we're trying to make it kind of more simple. It doesn't have to be complex. Like, I feel like there's like this saying by Einstein: if you cannot speak, if you cannot explain like a concept to a 5 year old, then you haven't understood it yourself. So maybe that's the case for like all these years, like being kind of in the dark, you know. So yeah, so that's one thing that we're trying to do with in Panoptic is we're trying to make options very very accessible to almost anyone. Maybe not a 5 year old because I mean they won't have capital for that obviously,
No,
but
they should not. My son,
yeah,
my
I
son
mean
turning
we
5
never know. There's prodigies out there.
I'll give him a Ledger wallet and tell him, "Go
Yeah,
trade, son. Make
exactly.
me proud."
That would be the new iPad. Don't give iPads, kid. Give them ledgers.
No, that's true. He's gonna out maneuver all of us and be, yeah, making money left and right.
Yeah. So so yeah, so that's what we're trying. Like one of the main things we're trying to do is to democratize options and make it accessible to everybody. And also we have this decentralized environment, which is very interesting as well, and safe also. I have to say, like especially if we can recall what happened lately. So with the big hack. So yeah, and
And
so
time and time again. And the last thing is that whenever there's a crash, whenever there's a big market dislocation, you always say, "Oh, looks like these accounts got liquidated," but DeFi is always coming out on top. People have to pay their
exactly,
loans. There is no loss to the users because it's this smart contract based kind of agreement, which is a million times stronger than a piece of paper that you have to honor.
exactly,
So that's also the future of like most of the regulation over the past whatever 100 years was to make sure that no middle person was leaving with the money at some point because you had these kind of intermediaries. It's hard to enforce. That's why it's very hard to get regulation through because they are thinking about what was like 100 years ago and it was like papers in a file cabinet
yeah,
that made it. In this
yeah,
case, it's all smart
uh,
contract. It's actually very, very efficient. And again, if you
and
don't pay,
automated.
we can seize and liquidate you. No problem there.
Yeah, exactly. I mean, the blockchain does everything for you. You don't have to. And the blockchain and the
Yeah.
smart
A
contracts.
bunch of like nerds like ourselves can kind of create a product that goes toe to toe with ETFs and derivatives. with no
Yeah.
infra cost. It's very, very efficient too. So,
Yeah.
yep.
Exactly. Yep. Um, all right. So let me see if what I missed. Yeah. So additionally to all that has been mentioned, there's also portfolio diversification, which is another key benefit. So as crypto options enable investor to reduce exposure to like a single asset risk. For instance, you can always like buy options to hedge that as well, and you do that with multiple assets as well, which is even better, especially if you want to explore other opportunities. And furthermore, there's like, so as I said, there's hedging, risk management, which are the key points also in TradFi, and that's what we try to replicate as well in DeFi, which these two key points are they allow institutions and individual traders to protect their position against adverse price movements. So whether it's a bear market, bullish market, like anything. Options are there. They don't care about the direction of the asset. They're just there for many reasons. And at the end, the goal for options is mainly to make the market healthier, not just there to make things more complicated. Because at the end, if we go to TradFi, the formula that controls is just a formula. It's not very complex. Maybe you would need a little bit of probability to understand like the theory of it behind the scenes, obviously, like how it's generally formulated. But at the end, it's just a formula that you can just Excel sheets and just like implement it there, and it will give you the price of the option. So it's not very complex as people tend to, I don't know, tend to make it. It's very simple, and here in DeFi, it's even more simple. Um, and they're gonna stay here, like they're not gonna move, and it's gonna be a very like the way we see it, it's gonna be like just like the internet. I don't know if it was in the 90s, if I recall, the internet bubble, like the boom of the
Oh,
internet, like when everybody was kind of skeptical and they didn't know if they can, I don't know, buy stuff online or just like use it, and they were very scared of hacks. And then eventually now everybody uses it.
yes,
Everybody
slowly,
uses
very
it.
slowly, and then all
Amazon.
at once is typically how it goes. And maybe back to the Black Scholes model is to some extent a credibly neutral model that you can
Yeah,
use to price a wide variety of options, and the only thing you have to agree on is the volatility. But everything about the strike, times to expiry, all of this is kind of encapsulated by this one formula. So this is kind of the reason why, even though options seem very, very diverse, there's thousands of different markets. It all comes back to that simple model. And if you don't agree with that model's volatility, single parameter, then you can bet on it. But if everybody follows this and the spreads get tighter and tighter and lots of volume, then it's a very, very like fair way of pricing the options. If I contrast this with Panoptic and how we do this, we are doing perpetual options. It's a streaming premium. Black Scholes don't quite apply equally, but the
yeah,
key point is that the traders are what defines the premium at the end of the day. If there's a lot of trades, lots of swaps, lots of kind of tokens moving back and forth, this increases the volatility, you get paid more. So you kind of even more, you take a step back and you decentralize the volatility surface formula or calculation by trusting traders to trade. And same way that traders can say things are going to go up or down, and then kind of lots of trading activity happens, then you can actually also trust that these thousands and thousands of swappers are doing the best they can. The outcome is now
yeah,
that volatility is very, very concretely defined, and there's no, the same way that you cannot argue with someone's interpretation of Black Scholes because it's the formula that everybody gets. Similarly, there's no interpretation of, okay, is the IV or the volatility high or low? No, it did happen. This is how much swaps happen. Then you can actually have some trust in the payment that's generated because it's based on the real
yeah.
rates.
That's a good way to put it. Exactly. Yeah. So yeah, we can move to conclusion.
Yes.
Uh, we said a lot of things, right? So conclusion. So we have seen the evolution of crypto options, that has transformed the market from early on chain experiments to now a multi-billion dollar ecosystem driving liquidity, risk management, and institutional adoption. And we, on the other hand, we have seen that decentralized option protocols are solving key challenges in counterparty risk and liquidity and paving their way for automated on-chain trading strategies, just like what's happening now with Panoptic. And so, yeah, indeed, as DeFi continues to expand, option trading will play a key role in institutional adoption, and long-term sustainability, and also unlocking new financial opportunities for traders and investors alike. And thank you for your attention.
Yeah,
And if you have
amazing.
any question,
Yeah, I don't know. Oh, yeah, we do have a wait look at questions. Oh, on someone said, I don't know who this Brendan person is. No, I'm kidding. This
yes.
is the research
Who
team.
is that? Who's
No,
Brendan?
I don't know what to blame on Uniswap. No, I'm kidding. We love Uniswap. Uh, but yeah, I think at the end of the day, options are like one of the financial pillars of finance. You need the hedging component. You need the ability to kind of be directional without being kind of overextended. Options are
Exactly.
a very, very useful instrument for TradFi trading and also DeFi trading. The key point is that because there's no DeFi options at scale, it's hard to kind of maybe like take. I mean, realize those advantages because you need a lot of liquidity. With Panoptic is maybe even like a Uniswap moment. We can do a lot with options in a perpetual way that we do without having market makers, middlemen pricing on-chain activity. So that's a lot of what we bring to the table. It turns
Exactly.
out in a happy accident, Uniswap LPs are option sellers, so we don't
Oh,
even have to convert. You have to convert them, but not attract new users. All the LPs are option sellers. But
yeah,
yeah,
they're already there. The users are there. We just need to tell them that, like, guys, you're doing the same thing. You just need to move a little bit
yeah.
outside. And yeah,
But yeah, this is great. Thanks very much, Amy. This is great. So
thank
we will definitely. I think these will be repackaged in the thread. But overall, yeah. So we'll do this every Tuesday around the same time, and then go over previous research, but also all the new research that we're coding now. Lots of back testing, lots of data. So this is going to be very, very cool. Um,
yeah,
but yeah,
it will be.
all right. That's
Well,
it for
thank you,
now.
guys. Feel
Yeah,
free to ask any questions on Twitter, LinkedIn, or even YouTube in the comment section. And yeah, we'll go back. Like we'll. I mean, I'm gonna just like go scroll and I'll answer everybody.
exactly.
And yeah, thank you for your attention and see you next week.